Good morning, everybody, and this is your Dow Jones day trade setup for today. So a couple of things brewing here. The first one is we do have a break above some structure here, and that is this neckline of the double bottom, and that is at 34.70. We do have a pretty solid wedge forming on the S&P, but nothing really that solid here. It just looks like a big range to me. So I'm really interested in what's going on here. You can see the chaos that we've had before. Every one of these tails here is going to offer some form of resistance. So let's just put this one in. It's pretty relevant. And this one up here is a weekly level at 31,343. So look at the oscillators, all grouped to the upside. Every time we group to the upside, pretty much most of this year, we have retraced. There was only this short spell here for a couple of weeks where it looked like the trend had reversed, and then we started getting CPI data coming through again, and boom, 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 down we went. So for me at the moment, I'm very cautious about being long, to be honest. What I'm seeing on the DAX and what I'm seeing on the S&P 500 is this little earnings relief rally is coming to an end. I think we've got the big tech stocks coming through next week, and that is going to be the telling one, because you know, some of those markets are down dramatically at the moment, and the question is whether they are still down, whether they're seeing signs of recovery. And I think the jury is not out on that. I think everybody's pretty confident on where we're in a bit of a pickle on the market, so I don't think that's going to happen. Anyway, 3 hour. Tails to the upside, tails to the downside, bob wire confusion, huge confusion right in this zone. It's playing quite nicely into a lot of people's strategies to short the rally, and that's exactly what I'm looking to do here at the moment. Bit of diversions that formed here, and then we've got a lower high forming. So if this holds, we're looking for a rejection. Now, I wouldn't just jump in short up there. It's trying to pick the top. I'm looking for confirmation, and if you look at the 15-minute, you can see that the confirmation's not here. It's kind of just using these levels as support, or trying to. Technically, we should be looking for a break below the low of yesterday before that comes into effect. However, these levels here is something that I am quite willing to take a chance on. So 39.63, probably not as strong as what 31,343 is, but nevertheless a rejection off here, because what you're going to see is you're going to see price get here, you're going to see a inside bar or pin bar, engulfing bar form on this level. So it's going to be fairly easy to just jump in on the bottom of the structure break with a stop to the upside. So you're not going to risk more than 200 points, to be honest. And worst case scenario is should get going and you bounce off down here, and that's still an opportunity to take money until we break through the lows of yesterday, and then you've with the trend, and then you're a little bit more relaxed to get the move to the downside. So that's kind of my view today. I'm really not interested in chasing this long anymore. I think the steam is starting to run out, and the catalyst that's going to drive us to the downside is definitely going to be some results, some shock results, should we say. Anyway, that's kind of me for today. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.